you don't have to trade, right? Is the trend going up or a trend going down? Well, it's hard to tell when your short and intermediate are both pointing down and your price is now over your long term. So to me, this says sideways trend, don't do anything. And that's okay. Welcome to the OVTLYR Trading Room. My name is Chris Fuel. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. And I've been successfully trading since 2009. And this is where we save time, make money, and start winning with less risk together as a team. Now, before we get started trading, let's get into the lesson of the day. So, of course, stick around to see how we rank this video out of 10 and subscribe if you haven't done so already. So, this video is called Once in a Lifetime Financial Event is Here. Wait a minute. Wait just a minute. That's a nice shirt that guy's got on. Huh. How about that? What a very handsome choice of shirt that guy has today. All right, let's see what this once in a lifetime financial event is here.
We got the CPI data, the consumer price index that's going to settle once and for all. Is this a good start of the year or a bad start of the year? This market has been nothing but confused for the past 14 days. 2 weeks of total chaos, confusion, up and down. We just got...
This market has definitely been really choppy. Listen, you don't have to trade any of this, right? I have been sitting on the sidelines for a hot minute, mainly because the market breadth had been showing signs of bullishness while the market trend was showing signs of bearishness, right? Because of sitting on the sidelines, I had no risk involved, right? If I had gone short and the market's up 2% today, I'd be hurting. I'd be hurting real bad. But, you know.
At 24 hours ago, a great PPI data beating the expectations, and somehow the market flies out of the stratosphere and comes back to Earth same day. So what the hell is going on? This CPI data is going to fix everything. It's going to clarify if things are good or bad. Well, guess again, because this CPI data is just as confused as the rest of this market for the past 2 weeks. If you look at the CPI data on the month-to-month, well, we're up 0.4%, which is higher than the expected number of 0.3%. Well, that means things are bad, right? Well, not exactly, because if you look at the core is up only 3.2%, which is better than the expected 3.3%.
Okay, I'm really glad I clicked on this video because I did not pay attention to the news that came out today. So we're all going to learn something together.
Well, that means we're better, right? Well, not exactly, because the year-over-year CPI is up 2.9%, which is 2/10 higher than November, but exactly as expected. But before you get too confused about this, relax. I'm going to break down everything. I'm going to explain how this impacts the market, short-term, medium-term, long-term. What's the best strategy to navigate this volatile, confused market? Everything is coming up. Don't worry. Sit back. Don't click nothing. Don't smash nothing. Don't buy nothing. Just listen. So this CPI report was supposed to be the big kahuna, right? The PPI data is okay. The jobs data is okay. But the real deal, the real important measurement of inflation is CPI. And it was supposed to come in hotter or cooler and give markets some clarity about what the hell is going on. But as you just saw, there's different ways of looking at the CPI data. If you're positive, you have something to look at. If you're negative, you have something to look at, right? For those of you who are not statisticians or mathematicians, the mechanism is quite simple. We take a basket of goods and services, things we consume on a daily basis. We measure the price this month versus last month, and this month versus the same month last year, and we see how much prices have risen, right? If prices rise more than we expected, well, that means we have to pump the brakes on the economy because inflation is getting out of control. And if prices don't rise as fast as we expected, then we can actually hit the gas and actually accelerate the economy, let it run. That's the whole purpose here. Now, the ones who are in charge on accelerating or hitting the brakes is the Federal Reserve. They're the driver of the bus. And what they're seeing, the data is supposed to get calculated by these complex algorithms, and the most smartest people ever supposed to make a decision on how they react, what kind of pedal they press, the brake or the gas, right? So in 2022, in March.
Okay. I'm glad you brought that up. So I do a lot of consulting with financial institutions. And one thing that I talk about is Jerome Powell is very aggressive. I say he's either all the way on the gas or all the way on the brake, right? He's either raising rates as hard and fast as he can, or he's shutting them off and setting them back to zero. I guess I'm not the only one who's thought that.
March of 2022, these guys decided to hit the brake all the way. And they hit the brake so hard, we went up from 0 to 5.25% interest almost instantaneously. That was by July of 2023. And from that point on, we were in an elevated interest environment, basically in the brake mode, right? But in September of last year, just September, I know it seems like a long time ago, but in September last year, the Fed changed their policy and they said, well, inflation is doing fine. We can let go of the brake and we can start hitting the gas. And they started gently to hit the gas, lowering rates from 5.25 to 4.25. Right now, this is exactly what we are. We are in the midst or in the beginning of a cutting cycle by the Fed, most likely heading towards the 3% region, which is going to be neutral.
I am curious. I definitely feel like rates are going lower. In fact, we'll pull up the CME Fed Watch tool real quick. CME Fed Watch. This is a great tool. So it's January right now, and you can see what the predictions are for the next, future, basically. So let's go to December of 2025. The current rate is 4.25 to 450. It's saying there's only a 16% chance that it stays there. So an 84% chance it's lower. And mainly the consensus is lower by 50 basis points. Yeah, 50 basis points on consensus there. But I do wonder to myself, this is a thought that I've had is, I don't have the data. I wish I did. If rates have gone up 2-3 times, prices have gone up on everything, right? How much has that pulled back on home sales, auto sales, you name it, right? I know that data is out there. I'm really curious to see what the decline is, because I know that there's like a whole swath of people who want to get into home ownership but can't. And I always like to use the example of my house, right? I have a 3 5/8 mortgage for 30 years. And if I were to buy this house today, it would cost 4x higher on my monthly payment because of the appreciation of the house and the fact that rates are basically double from where I got it in. When prices go up like that and the financing goes up like that, the buyer pool gets smaller and smaller, right? There's only so many people who can afford a mortgage that's 4 times as high as my mortgage. And because of that, like, how is that impacting the overall broader economy? That's a stat that I would really like to know. I just don't know. If you know, put it in the chat.
Rate, right? And the Fed has to decide how fast they want to get to that 3%. And maybe if things get out of hand, maybe they press the brake again, maybe they press the gas again. All depends on the CPI data. So when the CPI data comes in better than expected, we can expect more leeway from the Fed, more free money, good for the economy, good for the stock market. And when things come out harder than expected, that means inflation is not under control, which means the Fed might slow down the cutting cycle, and it's going to be bad for the market and bad for shareholders. That's the whole purpose here, right? So how today's data, what we just saw, impacts the narrative of the Fed, right? The narrative of the Fed going forward, they have a whole year ahead of them, how this thing impacts, right? Are they slowing down? Are they accelerating? Well, the one thing I would just tell you is do not get carried away by one CPI reading of December of 2024. We're talking about one data point out of many, many, many data points ahead that may change everything. We're not back to the 1970s crazy interest rates, and we're also not, the job ain't done yet. It's just 1 month of inflation rising as expected. Nothing crazy. We're still below 3%. So there's nothing insane here. Right? So this result, I don't think changes anything in the way the Fed looks at this. And if you look at the way the Federal Reserve interest rate cycle is being priced by the market right now, and these percentages might change, by the way, because they're dynamic every day, they might change. According to the Fed CME Watch tool, you'll see that the Fed has 6 months to make up their mind about the next cut. Then,
that's funny. He was just talking about this. Okay, so 6 months, he's saying. So current rate 4.25, 450. That's this spot right here. I mean, I don't know why he says there's a 6 month gap on that. Let's see.
You don't have to do it right now and not in the next 6 months. Why? Because the current prices in the market, the elevated market we have right now, is pricing in there's not going to be a cut in January, March, and May. So according to this market, the cut is not coming anywhere before June of 2025. So the data points for December 2024, when the real cuts are going to start anywhere from June to December of 2020.
I mean, I can get on with that. It looks like, March, there's a 30% chance. May, there's a 45% chance. So that data may be a little bit old from when he saw it.
5 really bears a minimal meaning on what the Fed is going to do. If you look at the other data points here, right, we have 9, 10, and 12, September, October, December, as the potential candidates for a Fed cut. Between 1 and 3 cuts in the last 3 months of the year are probably already priced into this market. But if you look at the middle months, if you look at 6 and 7, June and July, those are absolutely toss-ups. 50%, nobody knows what happens. These are the months that are going to drive the stock market up or down. We all know we're not getting a cut in the first 3 cycles. We all know we're probably getting 1 to 3 cuts in the last 3 cycles of the year from September onwards. But right now, nobody knows about June and July, which means that if the data comes in ahead of June as positive, allows the Fed to cut rates faster than expected, a June or July cut, that's going to send stock prices up. But
all right, so June cut looks like a 66% chance. July cut looks like a 73% chance. So yeah, clearly things have changed since he made his video, but yeah, I see where he's going there.
On the other hand, the opposite can happen. All of a sudden, we might have bad data. And then if we have bad data before June and July, and now we don't have a toss-up anymore, and we have maybe a rate increase, well, in that case, the stock market might plummet. The whole point here is about what happens before June and July. But as it currently stands, the current setup has a lot of time to develop. The Fed has 6 months to make up their decision, and none of what just happened today really bears a lot of meaning on that decision. The more important months are going to be what happens in March and what happens in May ahead of the June toss-up. That's going to decide where stocks are headed. And that concept should drive your strategy going forward. A lot of you have asked me over the past few days, well, Tom, the market has been red, it's been green, it's been confused. What are you doing right now? What is your strategy for 2025? And I'll tell you because I have.
Well, sitting in cash is a very valid trade, especially when nothing has changed since November 21st. You know, the market's gone sideways and it's chopped up a lot of people.
It right here, ready just for you in my notebook. So my strategy starts with a mindset. I first of all take into consideration to whatever happens in the short term is absolutely normal knee-jerk reaction. The first couple of weeks have been confusing, but that's just the markets. The markets in the short term tend to overreact, and I'm not making any investing decisions based on said.
Well, I mean, the market is definitely overreacting today, up 2% at the moment.
Overreactions. I don't focus on the first 2 weeks of the year, not on the first month of the year. I look at what this year is going to look like based on geopolitics, on the economy, on macro data, everything that has to do with the next year, 2 years, not specifically how the market overreacted for the past 2 weeks. That thing is irrelevant. Now, the other thing is that I expect volatility to continue. I don't think that what we've seen over the past 2 weeks, as painful as it felt for some shareholders of certain stocks, Palantir, in general, if you look at the market, that's like a 3% drop. A 3% drop is nothing. It's a fart in the wind. Now, the market drops 5%, which is almost double than what we had in the first couple of weeks.
Oh, hang on. We covered this the other day. CNN, fear and greed. We covered this the other day that CNN's fear and greed index had already hit extreme fear with the market down 4%. Good gravy. Once the market drops 10%, like it would, oh, here we go. It would like fall off the cliff. It's currently at fear, just at fear. Yeah, the market's not done anything. A 2.8% pullback is nothing. And if you're stressing over a 2.8% pullback, bro, this may not be the right place for you.
3 times per year. So there's still 3 times of what we just saw, times 2. And that is even before we talked about the 10% drop that happens every year in the market. So there's still bumps ahead. There's still volatility ahead. What we've seen in the first 2 weeks, it's not that bad. It's just the bumper, right? But because people have gotten accustomed to what we've seen over the past 2 years and they've gotten used to this complacency and the market just green every single day, all of it.
Oh man, okay. The other day we had one of his videos that I didn't like. This one, however, I'm really liking. He's talking about the economy, really keeping it high level, keeping it on point. I like that. But B, he's talking about being risk first. Oh my gosh, yes, because so many people have gotten complacent over the course of the last 2 years and just decided I'll just buy whatever and it's going to go up, right? If I buy AMD, it's going to go up. If I buy Nvidia, it's going to go up. If I buy Tesla, it's going to go up. Doesn't matter. I buy something, it go up, right? Line go up. No. So I appreciate him talking about risk first.
All of a sudden that feels horrible. It's not horrible. The horrible stuff, the volatility is still ahead. You haven't seen it yet. I mean, and if you look at what happens in this market, you have to look at the macroeconomic data and the fundamentals in tandem, right? We'll look at this setup for 2025, and you have to look for reasons to be bearish about the market, right? So if the job numbers are getting better, if the economy is getting better, if unemployment is coming down, inflation is below 30%, it doesn't seem to be getting out of control, right? And if we have good GDP numbers, and we have a friendly administration to the economy and to M&A activity and to deregulation. And on top of it, we have cheap oil. We're in the winter, which means we're 6 months away from the peak of the cyclical oil prices. And we know that the relationship between Trump and Saudis could not be better, quite opposite of what this administration had with the Saudis. So we know the Saudis and Trump are going to work out some deal to keep oil prices low. And we're already in the mid-cutting cycle of the Fed, which still goes to 3%. So all of that combined with the fact that, yes, we did 60% in 2 years, but you have to understand the AI revolution just started. When Netscape came out, NASDAQ did 140% in about 3 years. Right now, we've done about 60% in year and a half? We're still midway through the bull cycle that we've seen in Netscape. Netscape did 140 in 3 years. We're about 60 in 2 years. So there's still room to run, as crazy as it sounds.
Well, I mean, that doesn't mean it's going to repeat itself, right? I mean, to say that the Nasdaq is going to go up from, if it's up 60% up to 140%, I don't know. I think that's taking a pretty big leap there.
And I don't think the AI revolution is any smaller than the invention of the internet. I think it's just, at least it's equivalent, right? Although, statistics and history mean nothing, but based on all these factors I'm looking at, I'm not seeing anything that might send the stock market down in 2025 fundamentally. Long term, the markets don't just drop because something has to happen to break the system, right? And right now, we don't have that. We don't have that in our eyesight, but it doesn't mean it's not there. There's a lot of unknowns. COVID was unknown. We couldn't see that coming. Geopolitics can shuffle the cards and reset the whole game. Obviously, you have to take that into consideration. So you have to be ready for all scenarios, right? Even though you're bullish on this market, maybe like me, or you're bearish, you have to be ready for the opposite of what you're expecting to happen. And that means...
I agree completely. Now, to that point, right? As a trader, as a short-term trader, or a long-term investor, you really should be agile, right? Agile in the fact of, if something's changing, you need to be aware. Number one, don't just buy something, forget about it, and go to sleep on it, and then wake up 3 years later, see that it's down 60% because you were a long-term investor, right? You need to be market aware, right? You're putting money at risk. You earned that money. You gave your blood, sweat, and tears on that money. I don't let my money sleep, okay? But you really need to just stay risk aware. Risk aware, risk first. I wouldn't say I'm bullish or bearish, and I would say if you take a market posture like that, just be flexible, right? Just totally be flexible. Be willing to be wrong, okay? Like today, the market is up gangbusters, right? Yesterday, the market was down well under its 50-period EMA, and today it's looking like it's going to moon, right? That absolutely does change my perspective. But one candle does not make a trend, okay? One candle does not make a trend. Let me catch up on the chat here. Xenon has some breaking news. Xenon, thanks for being here, and thanks for the breaking news. What is this? All right, Gaza ceasefire. That sounds great. The way that Trump talks, like I just don't want people to die. That's my opinion as well. Sebastian, glad you're here. But Joe Biden wants to take credit for it. As we all know, Trump has made this deal happen. Trump's making that deal happen, no doubt. Mikey Mike says, I was told 2 to 3% mortgage rates was an anomaly, a unicorn. Folks waiting for those rates on a home loan to return. God, I can't read all of a sudden. Folks oh my gosh. Folks waiting for those rates on a home loan to return will never see them again. This came from a heavy hitter real estate guru. Dude, it could be 100% right. I have no idea. AMD go moon. He says, when Trump comes, everything is going to jump. Yeah, let's go. Can't wait till Monday. Brandon Havens, finally able to watch you live. Well, Brandon, I'm finally able to have you here with us, my friend. Glad you made it. Okay. So what I want to do real quick is shift gears slightly. I want to take a look at the SPY and inside of OVTLYR. Now, we still are sitting on this sell signal right here. The market's about where it was when it came through, right? This is about flat from that point over. The market is still pushing towards the more fearful direction. So I'm not saying that this is overdone. I'm not saying that it's going to turn around and crash again. Not at all. I'm just saying be market aware, right? Absolutely be market aware. I would also point out that market breadth has been increasing. This line right here. Market breadth has been going up, which is the number one reason why I haven't been trading anything, is because when the market is trending down, yet the market breadth is growing, right? You've got things that are moving in opposite directions. So the easiest trade to make in that case is just hold cash, right? Nobody's making you trade anything. So let's go rank this video real quick. I feel like Tom Nash actually did a great job. First, he had an incredible shirt, probably the best shirt I've seen all day. Disclosure, I pulled up the video. I saw he was wearing that shirt, and I was like, I have that shirt. Let me run and go put it on real quick. So I just thought it'd be fun. He covered lots of good points. He brought the receipts. I feel like he knew what he was talking about, which I really appreciate. And while he did disclose that he's bullish on the market, he didn't come out as like, I'm going to pump this stock, moon this, Lambos that. So I'm actually going to give this video. How would you rank it? How would you rank this video? I feel like it's better than a 6. If anybody got a 7, I would give him a 7, but nobody gets a 7. So I'm going to have to land on 8. So Tom Nash got an 8 from me today. Well done. He got an 8 from Alan as well. Way to go for him. ESAT says, how do you join the Discord group? Well, Alan, that's super easy. After you sign up for OVTLYR, in the sign up process, we send emails, of course, to let you know everything's working. There's a link to just click that link. You're in the Discord. So super easy as it comes. Dave says 8.5. Michael says a 5. He came in hard on that one. Randy, nobody gets a 7. It's a rule. He sets a 6. All right, very cool. So that was really cool. I like that video. I'm glad I picked that one today. I definitely feel like I learned a lot. Let's go now to today's member highlight over in the Discord. Okay, so lots going on in the Discord. Let me make this bigger here. We have lots of new people joining in. Glad you're here, Ross. And let's see. So Mahesh dropped some updates yesterday and everything coming through. Mahesh also talked about some more upgrades. Dave said he was playing around with some stuff and he's enjoying it. And what else? Oh, so the server issue is definitely going on. It's definitely running slower today for sure, but that should be fixed here momentarily. Any guides that you can follow? So Rugby Nut, glad you're here, my friend. Over in the VIP Investors Toolkit area, wrong button. Here it is, VIP Investors Toolkit area. We have so much to help you out. I think you were asking specifically about my trading plan. Let me double check that real quick. Where did it go? Oh yeah, golden ticket trading strategy. If you go in the VIP Investors Toolkit and then scroll up, you can find a PDF of it right here. And it's right there, my friend. Everything you'd want to know all in one place. So definitely check that out. Let's see what else happened in the Discord. Go back over to general. Oh, there was a question about German stocks. We do cover around 2,000, soon to be 2,500 stocks, and we do have lots of customers in Germany, and some of them are in the chat right now. Hello, my German friends. Guten Tag. Do you have any issues with accessing OVTLYR from Germany? I don't know, and I'd really appreciate your feedback. Hey, how you doing? Serghorpt. How you doing? It's the first time I remember seeing you here. I'm super glad you're here. Thanks for the number 6. And Ross, hey, was that you in the Discord? Glad you made it, dude. All right, so that's going to wrap our member highlight of the day. But of course, be sure to share your stories in the Discord. And tomorrow we are having the weekly winner circle on Thursday instead of Friday. This weekend we're going to a super special Boy Scout camp. I'll tell you all about it next week. Remember, the market's closed on Monday, so I'm going to be out Friday and on Monday. But we'll still throw some stuff up on the YouTube for you. But yeah, the weekly winner circle. So real quick, the way that you can enter the weekly winner circle is super easy. You just come over into the share your big wins section. Let us know how you're using OVTLYR. It looks like Mikey Mike and Wes and Dave and Bob and Ryan were over here talking about different things. Brian as well. And when you do that, you're entered to win, right? My only rule is you can't win 2 weeks in a row, and you have to post something over here in the share your big wins. So the winner of that gets a $10 Amazon gift card. Sebastian said it doesn't load properly today. Yeah, we're having server issues for sure. But it is already being addressed as of right now. I have no idea what this says. Let me read it in my Texan accent real quick. Guten Tag, da sind nicht viele Dehucher here. That probably sounded great. First rule of OVTLYR, you should tell everybody about OVTLYR and hit the like button if you haven't done so already. And now back to trading in the OVTLYR trading room. So real quick, what is OVTLYR and how does it work? Well, you remember when old Uncle Warren said, be fearful when others are greedy and greedy when others are fearful? Well, OVTLYR shows you when investors are acting rationally fearful or greedy and by how much, allowing you to get into the stock before the OVTLYR move happens. And I'm allowing you to get the annual pass for just 82 cents a day, but that ends at the end of the month. So pick it up while you can. Now, my style of trading using OVTLYR, I call the golden ticket trading strategy. And it always starts with the market. Now, the OVTLYR trend template you're familiar with, I talk about it literally all the time. It's the 10-period moving average, under the 20-period moving average, with price under the 50-period moving average if I'm going short. Now, what you see right here is a contradiction on that, right? a non-confluence, if that's the right word. So price is over the 50, right? But your 10 and 20 are still crossed down. So for me, this would be considered a sideways trend. All right. And this is a no man's land. It really is. You don't have to trade, right? Is the trend going up or a trend going down? Right? Well, it's hard to tell when your short and intermediate are both pointing down and your price is now over your long term. So to me, this says sideways trend, don't do anything. And that's okay. I need you to get really, really comfortable with just sitting on cash. Just sitting on cash. Michael says, it's night in Germany. Exactly. I grew up in Germany and it sounded good. Well, news to me, my friend. I may have a German last name, but that is as far as my German goes right there. So this is an inconclusive sideways trend. So I wouldn't go any further, but we can take a look at the market breadth, because that's what I mentioned earlier has kept me out of the market. Is while the trend was going down, the breadth was actually increasing. Now, the way that we measure breadth is this green line on here is how many stocks are on the bull list, right? How many stocks have buy signals? And it has been going up. We've been getting more and more stocks with buy signals. And then we add in the 10 EMA, so the moving average of that list, which this is really cool. This is an indicator that I personally came up with. And you can see that the market breadth is increasing. So that's why I've been sitting on the sidelines and not stressing, right? Because I'm telling you one thing. If I had been in this market going short and everything's up like 1,000,000% today, I'd be freaking pissed. But you don't have to, right? You can hold cash. It's a lot easier than you'd think to just hold cash. Now, for me, this is where I stopped trading because the SPY signal is still on a sell. The market trend is now sideways and the market breadth is bullish. Now, there is no confluence here, right? So that has locked down the master key, right? That's locked down the master key because I'm not going to take anything any further than that. And it's funny because I haven't traded since the election. I don't know when I'm going to trade. I was just talking to my dad this morning. He was like, "Hey, will you invest some money for me?" And I'm like, "Sure." And he's like, "Well, what are you going to start trading?" And I'm like, "I don't know." I don't know. Could be a while. But I'm okay with that. And, just hanging on to cash as much as you can. So that's going to wrap it for me. But I did tease earlier about the announcement. So Mike, I'm going to quickly talk about this and we'll give more details later on. But we have partnered with Tradier. The announcement actually came out on December 25th. And I personally am going to be trading with Tradier as well. I have been with Tastyworks since the dawn of Tastyworks, and I'm going to be moving over everything to Tradier. I actually haven't done it yet because I was like, it's not going anywhere anytime soon, so I'm just hanging out. But Tradier is going to allow you to trade commission free. And get this is the best part. Let me find it. Where is it at? Get 6 months of Tradier Pro free plus $150 reimbursed by Tradier when you open an account with a minimum of $3,000, right? So when you open an account with Tradier, they're going to give you 6 months of Tradier Pro for free and $150 reimbursement. I don't know how that's going to work, but $150 reimbursement back to you by being an OVTLYR customer. I don't know all the details. I don't know how to take advantage of this, but I dropped that link in the chat earlier. You can go to it as well. trade.tradier.com/OVTLYR. That'll get you to right here. You can just click that orange button to open an account, but it's going to be really cool. So I know Mike has been like dying to know when this was coming out. And we had been teasing this for like 3 months now. And Dave says, can't wait to see the integration between Tradier and OVTLYR. And ESAT's throwing some more German at me. It's most likely going to go with Intel. Okay. So that's it for me today. Let me ask you a question, though. Tell me what you're trading in the chat. I'd love to hear. And be sure you come back tomorrow where we'll help you save time, make money, and start winning with less risk together as a team. And of course, let us know if you need anything in the Discord and have a fantastic afternoon. Thanks for coming to the OVTLYR Trading Room. We'll talk soon.